Hi, everybody. This is Brijesh Dalmia from Masterstroke, Wednesday, 7th of December, 2022. And we have Mr. Aditya from Motilal Oswal Fund Manager joining us today. Hi, Aditya. How are you?
Yeah, all good, Brijesh. Thanks for having me on the show. And
Thank you so
good
much. And
evening to
thank you.
all your audience.
And thank you to the audience who have joined in from across the country. And thank you so much. And we will try to have some good discussion today around the leaders of today's and tomorrow, and what is uh, Aditya's thought in terms of where one should look at investing. And he is himself managing a fund at Motilal, and I will try to scratch his head around investment. So, Aditya, let me begin by asking you, it has been so difficult now to create alpha, especially in the large cap space. And even the mutual fund advisors, distributors are finding it difficult that in which space they should recommend or suggest products to the client. What is your take on this active and passive uh, uh, debate, which the media is highlighting? What is your take as a fund manager?
Look, Brijesh, if you look at global markets, I mean, India follows a global market with some lag, 5 year, 10 year, 15 year. So if you look at probably the US market, which is the most developed market in the world, so there also that same debate has been in existence for the last 10, 15 years. So incrementally, you've seen passive take up some share from active over the last 10, 15 years, but both coexist side by side because there are points in time when active does well, there are points in time when passive fund management does well. So I think there's a requirement for both from a client point of view. I'm sure that 2017 to 2019 were pretty bad years for active fund management because that was a point in time where you saw a very polarized market, maybe 10 stocks were participating, the big wigs in the Nifty or other index. At that point of time, use of active fund management did much worse than a passive fund management. But over the last 1 2 year, as and when you've seen broad-based recovery, you've seen a lot of sectors have opened up, and hence market has got much widened from that point of view. So hence, active fund management has come back over the last 2 years vis-a-vis passive fund management. So I think there's a requirement for both, and as and when what fits in from a client, this thing we can take accordingly.
All right. So, from an investor's perspective, from an asset allocation perspective, large cap, mid cap, small cap. Basically, there are three categories, and then you can plug it into various other fund strategies. If you were to suggest somebody in a 30 to 50-year age bracket with a long-term investment horizon in equity, what should be in a space, considering the returns potential and the risk management?
Which is again, as a thumb rule, large cap give you stability, and mid caps and small caps give you slightly higher alpha over the long term. So there's a beauty of large cap, there's a beauty of mid and small cap. So as an investor, it is very important to have a diversified portfolio or a diversified asset allocation, wherein you have large cap in the portfolio, mid cap and small cap, all of them together. Again, case in point being, look at uh, CY18 and CY19. Those were the 2 years where small cap and mid cap did very badly. What I remember, I think small caps were down total 40% in those 2 years. Mid cap were down around 20% in those 2 years. But you'll be surprised to hear that large caps was up 15% in those 2 year time frame. So there was a massive divergence of small cap, mid cap vis-a-vis large cap in those 2 years. So that again shows that point that as an investor, you need to have all in the portfolio because ultimately, what is the objective? Objective one is to get the highest return, not the highest return, I would say the best risk adjusted return, and to make the journey, investing journey less volatile as possible. So, in case an investor only had small and mid cap in those 2 years, he would have got butchered seeing the portfolio being down 30-40%. But in case he would have had a 30-40-50% large cap and 40-50% mid cap, probably he would have not seen as much volatility in his portfolio. So I think any investor who's a long-term investor, there's a requirement to have all parts of the spectrum, large and mid and small. And percentages may vary. I mean, one can go with a large cap being 40-50%, mid cap 30%, and small cap 30%, or it could be equal weighted one third, one third, one third. So even though you mentioned the age profile being 30 to 50, but still it depends on the risk of the client. In case he is slightly higher risk, maybe he could go for a equal weighted large, mid, and small. In case his risk appetite is low, maybe he could go for a two-third large cap and one-third mid and small cap. But I think there's a need for having all three in the portfolio. One cannot have just large cap or one cannot have just mid cap in the portfolio. So
Yeah, okay. So एक question भी आया हमारे पास में, and I will take this to ask you this. आदित्य, किसी म्यूचुअल फंड डिस्ट्रीब्यूटर को, किसी क्लाइंट को मिड कैप अलग देना चाहिए, स्मॉल कैप अलग देना चाहिए, लार्ज कैप अलग देना चाहिए, या फिर उसको एक बंडल्ड फ्लेक्सी कैप, large and mid cap, or a multi cap? What are the pros and cons of giving separate allocation into large cap, mid cap, and small cap, and a bundle product? What's your take?
So, Brijesh, in case it's a bundle product, in case it's a bundle product and the fund manager has flexibility to move money into mid cap, small cap, or large cap, depending where he sees value at that point in time, he has that flexibility to move that. So, but in case you are giving a separate product, a large cap fund manager will only invest in large cap, mid cap will only invest in mid cap, a small cap will only invest in small cap. So, it doesn't have that flexibility. Just to again give you an example, Suppose suppose there are three portfolios: large cap, mid cap, and small cap, and you've put 100 rupee into each portfolio, which means as an investor you have 300 rupees invested, one third being in each of those three buckets. But in case it's a bundle product, I have the flexibility in case mid cap and large cap, mid cap, small cap is not looking very attractive. I can make it large cap 50-60% and small cap, mid cap 30-40%. So I think flexibility in a bundle product is slightly higher than when you give different compartmentalized portfolio, I would say.
So, friends, the idea of asking such question is that you should make your own view, independent view in terms of आपको क्या अच्छा लगता है, कैसे आप क्लाइंट का रिस्क मैनेज कर सकते हैं, आपको बंडल प्रोडक्ट देना है, आपको इंडिविजुअल प्रोडक्ट देना है. From the Aditya's perspective, it is better to have a bundled product rather than an individual specific large cap and small cap, because the divergence of returns can be very large into individual schemes and individual asset allocation. So, Aditya, what's your take on when we highlighted this topic of leaders of today's and
Brijesh, your voice is breaking, and I would like to add just one more point there, Brijesh.
What do you mean by that?
Brijesh, before we move on to the next topic, can I add one more point on asset
Yes, yes,
allocation?
please.
One thing is when investor starts his journey, probably he can have an asset allocation 50, 30, 20, or whatever. But the most important thing is to be disciplined in the entire journey and to keep rebalancing the portfolio after maybe a 3 month or a 6 month time horizon. Because in case you don't rebalance, you are not able to take advantage of an underperforming asset class within that equity asset class. Again, coming back to the same example, 2018-19, you saw the small cap underperform massively. Had you not, so small cap, suppose before 2018, allocation was 30% in your portfolio. But post 18-19, that would have come down to 20% just because they had fallen. So it was very important at that juncture to increase that allocation back to 30%. Because that is that only then you will take advantage of the mean reversion coming back. So like what happened the next 2 years, CY20 and CY21 small cap did much better than a large cap. So you would have been able to take advantage of falling small cap and mid cap in that time horizon. So what is important here is, one, at the outset, have a clear asset allocation strategy, how much you want to put into large cap, mid cap, and small cap, and then to keep on reassessing, not on a daily basis, but maybe on a 3 monthly basis or a 6 monthly basis, to see today what is your portfolio, how much is into large cap, how much into mid cap, and how much into small cap. And in case there's a deviation versus what you thought so at the start, you should rebalance the portfolio. So That is very, very important, I would say, Brijesh.
I agree. And if we can keep the conversation a little Hindi mein or English mein, some people are asking Hindi, some people are saying English. So this debate keeps on happening at Master Stroke, and we don't have a solution because the East guy says Hindi and the South guy says English, and so we are kind of a tug of war every time. But we'll try to keep thoda Hindi mein, thoda English mein. So Aditya, I fully agree with you. और मैं ऑडियंस को ये बताना चाहूंगा, कितनी भी डिस्कशन कर लो, कितने भी लोगों को बुला लो, कितने भी लोगों से पूछ लो, सबका आंसर एक स्टैंडर्ड आंसर है कि हर क्लाइंट के इंडिविजुअल लेवल पे आपको एसेट एलोकेशन करना चाहिए कि उस क्लाइंट के रिस्क प्रोफाइल के हिसाब से लार्ज कैप, मिड कैप, स्मॉल कैप कितना आपको देना चाहिए। इसके बाद ही आता है कौन सा फंड हाउस और कौन सी स्कीम और किस तरह के रिस्क एपेटाइट में आप, किस तरह के फंड मैनेजर में आप जाना चाहते हैं। सबसे इंपॉर्टेंट आंसर है, और अमेरिका की स्टडी और इंडिया की स्टडी सब जगह यही बताती है, 90% ऑफ योर रिटर्न्स कम्स फ्रॉम डिसीजन वेयर यू आर इन्वेस्टिंग एसेट क्लास, नॉट द फंड हाउस, नॉट द फंड मैनेजर, नॉट द स्कीम, and not the time, but in which asset class you have invested. So first is equity, and within that equity your return will be defined कि large cap में आपका कितना है, mid cap में कितना है, small cap में कितना है. So ये बहुत एक important point है. So Aditya, coming on to the leaders of tomorrow thing, what do you mean by leaders of today and tomorrow, and how can a mutual fund distributor benefit out of this strategy of identifying the future winners?
Look, Brijesh, the fund we are going to talk about was for large and mid cap fund. ये फंड हमने 3 साल पहले लॉन्च किया था, अक्टूबर 2019 में. And the tagline we gave to this fund was today's and tomorrow's leader in one fund. Why did we say that? Because this fund at the outset we defined will have a 50-50 between large cap and mid and small cap. So 50% आपका large cap रहेगा, 50% mid and small cap रहेगा. So large cap by nature would mean they are leaders. अगर suppose you have ICICI Bank, HDFC Bank, Reliance, L&T, ये सब leader है आज. But mid cap is where there is an opportunity, because वहां पे हमें नहीं पता कल कौन सा कंपनी कितना बड़ा होगा. Because today's good mid caps will become tomorrow's good large cap from that point of view. So हमने बोला कि मिड कैप का जो 50% है हमारा, यहाँ पे भी वी विल हैव दोज स्टॉक्स विच आर लीडर्स टुडे आल्सो. फॉर एग्जांपल सपोज मिड कैप 15-20 हजार करोड़ मार्केट कैप का मिड कैप कंपनी है, आपके पास चॉइस है. आप ऐसा मिड कैप ले सकते हो जो कि अपने सेक्टर में 4th, 5th, 6th कंपनी है, बट देन इट इज अ मिड कैप बट इट्स नॉट अ लीडर. बट एट द सेम टाइम यू हैव एन ऑप्शन, आप ऐसा मिड कैप लो जो कि आज भी लीडर है अपने स्पेस में. एंड इन केस दैट स्पेस इज गुड, दैट कंपनी विल बिकम वेरी बिग इन टाइम्स टू कम. सो हमारा मानना है कि लीडर्स ऑलवेज शो दैट रेजिलियंस, बिकॉज हमने देखा लास्ट 3-4-5 साल में डिस्ट्रप्शन कभी भी आ जाता है. कोविड हुआ, किसी को नहीं पता था, रशिया यूक्रेन हुआ, नो वन न्यू दैट. सो इट इज ऑलवेज बेटर टू प्ले द लीडर, बिकॉज इन स्पाइट ऑफ बीइंग अ मिड कैप कंपनी, अगर वो लीडर है, it will show a lot of resilience in a downturn. And in a downturn, what happens? Any leader improves their competitive position. वो अपने आप को और strong बना लेता है, because its balance sheet allows it to do that. So longer term, what we've seen is a leader company, a strong company will do very well. वो अच्छे टाइम पे भी अच्छा करेगा एंड खराब टाइम पे अपने को स्ट्रॉन्ग कर लेगा. सो दैट्स व्हाई विद दैट थॉट प्रोसेस हमने जो मिड कैप्स मेनली ये पोर्टफोलियो में लिए हैं, दोज आर लीडर्स इन द स्पेस. जैसे कि फॉर एग्जांपल, जस्ट टू गिव एन एग्जांपल, like we have the number one quick service restaurant company in the portfolio. वो एक mid cap company है, but leader number one है अपने space में. We have the largest beer company in the portfolio, which is today a mid cap, but still a leader. So we have the largest city gas distribution company. We have the largest apparel fashion company in the portfolio. So what we are saying is, अगर सपोज बियर स्पेस अच्छा करेगा टाइम्स टू कम, 5 साल, 10 साल, 15 साल, बियर एज अ सेगमेंट विल डू वेल. देयर इज नो रीजन व्हाई जो नंबर वन कंपनी है वो स्पेस में विल नॉट डू वेल. सो ऑब्जेक्टिव इज you identify good pockets, good spaces, and then you play the leader in that space. Because अगर वो कंपनी लीडर बना है आज के दिन, वो सेगमेंट 5 गुना 10 गुना होता है अगले 10 सालों में, that company will surely become a large cap and a big large cap in times to come. So our saying is there's merit in having a portfolio which has a lot of leaders. All in large cap also, in mid cap also. So हमारे जो portfolio में है, large allocation is given to leaders, Brijesh.
So, and what are the themes you are playing, and what are the themes you think should do well in the next few years?
Again, Brijesh, again, if you go back into last 3-4 years, as I said, 2018-19 was a very polarized market because economy अच्छा नहीं कर रहा था, कुछ segment अच्छे कर रहे थे, कुछ segment अच्छे करते हैं तो बहुत polarize हो जाता है market. But ever since COVID happened, one benefit is that last 2 years में you've seen different parts of economy is doing well. Commodity अच्छा कर रहा है, oil and gas अच्छा कर रहा है, large parts of the economy is doing well. When that happens, I mean, a lot of sectors become investable from that point of view. So today, if I have to, the themes I am playing in the fund is one is financial is a big part of the portfolio. Like financial is around 1/3 allocation in the entire portfolio. Like belief is obviously agar macro is good, country does well, economy does well, banking is the biggest play on that. And now, I mean, whatever mess has happened in banking last 10 years, we've come out of that crisis, and today the balance sheet of these banks are the best in class from that point of view. And there's a new credit cycle starting. So I see banking and financial as one big pocket of growth in the entire market. And growth is there. Along with that, valuation seems to be reasonable on an overall basis. So there's a good chance that you will get a earning compounding of 15-20%. Plus, there could be a re-rating happening to the sector. So today also, bank, even though they have done well last 1 year, but still going ahead, this sector looks to be a pocket of growth with reasonable valuation point of view. So banking is one theme I'm playing in the portfolio. Apart from that, different theme, like one theme I'm playing is healthcare in the portfolio. Like healthcare, I mean, ever since COVID has happened, we've come to that realization that health is very, very important. And we are willing to pay any amount of money to make sure that we are healthy. And I mean, we've seen in COVID, hospital as a space. I mean, before that, hospital was, ठीक है, hospital hai. But last 2-3 years, at least all of us have realized the importance of an hospital. And I'm sure that each of us would have tried to get a bed in any hospital that point, it was not available. So bed hospitals is a very important part of the entire domestic healthcare chain because healthcare is again which is very diversified. You can play companies which export, you can play domestic companies. So within the healthcare space, I'm very positive on the hospital space. Like I have two hospitals totaling 10% allocation. Then I have two pharma companies which derive 90% of the profit from Indian market. So those are 5%. Plus I have a pharmacy retailer also, which got listed last year. So healthcare on an overall basis, I think will do good. And it's a proxy to consumption, I would say, Brijesh, because healthcare consumption, I mean, you go to a store, you decide कि क्या लेना है, क्या नहीं लेना है. But healthcare में, all of us don't have any option. If we fall ill, there's something surgery or something. It's a forced expenditure. So that's why the bargaining power remains on the opposite party. So I think healthcare net is a very area within the healthcare. Apart from that, consumption again I'm playing in the portfolio. So consumption will be 15% of the portfolio. Again, Vijay, if you look at the big picture, if you look at global market, developed markets, I mean, most of the big companies on the indices either are consumer companies or tech companies. So consumer company globally, which have done well, they have become very big. So here also in India also, I would say that we are a start of a consumption journey from that point of view. Because consumption can be staples, can be discretionary. And discretionary, low ticket size discretionary is where I would think there's a long runway for growth. We are just at the start of the journey. So यहाँ पे valuation सस्ता नहीं है. They are expensive, I would say, but the runway for growth is very, very long. And good companies have demonstrated in the past, they have, I mean, they have continued delivering. I mean, just to give an example, look at Titan. It started as a watch company, but then it got into jewelry. Then, Carrot Lane, they bought over this. So good companies, good in consumption, they always create a new vector for growth. And longer term, they can become really, really big. So that was just to give you an example. So I think consumption is one bucket, but though in the short term, it looks slightly weak because, last 6 months has been strong from a demand point of view. But you're hearing some negative thoughts on what is happening on the market. So consumption remains a strong area in case you are a long-term investor. There are more themes like capex and all and cement entering the portfolio, but these will be the main themes, Bridget. But on an overall basis, as I said, market has become much more broad-based. Economy has become much more broad-based. So there are three, four big themes in the sector, but the overall big theme is, Brijesh, that play domestic-oriented companies and domestic-oriented sector. Because now,
That's good.
looking at what's happening to Europe, what's happening to China, it makes sense to have a portfolio which is much more domestic-oriented. So within the portfolio, 94% allocation is to companies who are domestic-driven. So exporter like IT, hardly IT is 2.5-3% my portfolio. So the big thoughts being play domestic focus sectors from that point of view.
That was good. So, Aditya, from a fund manager perspective, you're managing large and mid cap fund of Motilal. When do you decide to exit a stock? As you said, 50% large cap and the balance 50% is mid cap and small cap. So when do you decide, for example, if some of your stocks have given fantastic return, you keep holding them, or you want to have separate portfolio? What is the time of profit booking? Why do you do the profit booking? How often you churn the portfolio? Can you throw some numbers for the MFDs that, in your fund, what is the annual churning rate? What is and how do you actually find a winner? How long it takes for you? You said that in pharma company you have 5% exposure. In banking you have 1/3 of the exposure of the total number of stocks. So what is the parameter when you identify a company? And when you identify a company, do you exit from another company, or how does it work?
No, Brijesh. I mean, you asked me such a long question in one question. So, in terms of, look, every investor has a style, Brijesh. Okay. So, as a style, how I've been trained over the last 15, 16 years is I've been more a buy and hold investor. I've been a more, I've been in the lookout for businesses which are much more structural in nature rather than taking tactical bets. So, one of the usual complaint sales team has with me is that you don't take tactical bets. So my style of investing is that you look at a business, it's a good business, structural business, then you play a good company within that space and you stick with that company for a long period of time. So that is the desired uh, style what I run. But what happens in practical reason when you are managing public money, there are reasons when you need to either exit or trim exposure. Like, there could be different examples. For example, the easiest thing is when a stock becomes very, very expensive. Then exiting that stock, it's very easy to exit, even though you need to be emotionally, because we fall in love with our stock, irrespective of what is the valuation, we tend to hold it. So one reason is obviously when it has become very, very expensive to justify valuation. The other reasons could be, suppose your base case is not playing out. The hypothesis you entered into a stock, was not playing out. So, obviously you exit a stock. You also make mistakes, so you need to cut your losers at some point of time. Again, to give you an example, like one of the sector I've been very positive on has been diagnostic, and that is a sector I've been playing last 5-7 years in my portfolio. But COVID happened, the space did well. But I exited some bit of it. I couldn't exit the whole entire exposure. But then what happened? You saw so many competitors enter the space. You saw Tata MG enter, 1MG entered, NetMeds enter. So you saw so many new potentials. So a lot of pharma companies enter. So which means the base case, what I was playing was good structural demand, and supply side was controlled, but supply side completely changed over the last 1.5 years. So in case, I would have been, it would have been my money, I would have still held on for years and would have seen that disruption next 1-2 years. But managing public money, I mean, then you don't have that time horizon to wait in all your stocks for that stock to emerge out of that crisis. So, I mean, sadly, I had to exit that stock. So there could be different reasons for that. Like again, to give you an example, like COVID happened in 2020. I mean, the portfolio positioning you had before entering into COVID completely changed after COVID happened. You saw the B2C companies did very badly. I mean, for example, you have a mall operator in your portfolio. You have an alcohol beverage company. People are not going to bar. People are not going to mall. So what happens to that space? So there was a 2 year limbo. So at points in time, due to these crises, you need to kind of pair exposure or something. So there has to be a balance between your long-term thinking versus, I mean, next 1 year in case you see headwind. So, I mean, but generally I'm a long-term investor, and if I have to give numbers, if you see this fund was launched in October 2019, so it has a 3 year history. So the churn has been roughly around 30% on an annualized basis, which means on a 3 year basis, the portfolio has got changed. So in case you use that yardstick, 3 year is when my holding period would be. But then one needs to remember that last 3 year we've had COVID in that period. We've had a Russia-Ukraine war. So I mean, some bit of changes one would have needed to make to take care, protect the portfolio in those times. So that would be my overall thought process here, Brijesh.
So this is an interesting question by Paresh. I will take that first. Uh, what is your take on the market? And as a mutual fund distributor or as an investor, he should invest one-time lump sum money in equity markets at these times, or he should go through STP mode if he has the lump sum money. As a fund manager, are you comfortable getting a lot of money now to invest, or you want it to come into tranches? What is your personal call?
So, Brijesh, this is a question. If you would have asked anybody last 10 years, the easiest answer to say is going to a SIP mode. Because, I mean, it's very difficult to say what will happen next 3 months, next 6 months. It's very difficult to say. And longer term is proven right. It's better to play safe and you invest gradually rather than putting one at one go the entire sum of money. Because at any point of time, you can see the glass half full or you can see glass half empty. I mean, headwinds versus tailwind, that is a constant debate one keeps on having within the head, keeps on having with other people. So today also, if you look at how Indian market is placed, if you look at what are the headwinds from a short-term point of view, I mean, like entire world, what US is going through, what Europe is going through, what China is going through, it doesn't look pretty rosy at this juncture. And I mean, the growth forecast we have for the world as a total, like this year expectation is 3%, that will moderate to 2.2%. So that's a very little moderation in growth we are expecting on an overall aggregate for next year. But what happens? But seeing the rate increase, what has happened in the developed markets, my sense is that probably the downside could be much larger than that. So I mean, and whenever India might stand out on a relative basis, but in case the world does badly, I mean, India will not be immune to that. So that is a worry I have from a short term point of view. The other is obviously, I mean, there's been a one thing is as an investor, last 3 months, 6 months, last 12 months, one has been grappling with the fact that what part of the revenue growth for a lot of these companies is composed of pent up demand and what part is a base revenue growth. So going ahead, I mean, feeling is that pent up demand is will go away for sure. I mean, there's been enough of pent up demand which has come in, and when that happens, you might see optically revenue growth slightly moderate. So how the market takes in its stride, time will tell. So those are the headwinds we see, Bridges. But at the same time, if we see long-term big picture, one is obviously India is a loser when commodity price goes up, and commodity price are benign. India does well in that. Economy does well in that environment, and Russia-Ukraine war cannot continue forever. So yeah, Bridges, you want to ask something?
No, no. So fine. So I will have an add-on question to this, Aditya,
Sure.
with your permission, and
Sure.
I want to dig a little deeper for the benefit of MFDs joining this event. SIP and STP is proven. Any market, good market, bad market, you do it is acceptable. You should do it. It should do well over a long period of time. बट कई बार क्या होता है आदित्य कि क्लाइंट के पास 10 लाख 50 लाख 1 करोड़ रुपया है लमसम भी एक रिक्वायरमेंट होती है सो एट व्हाट टाइम एक एमएफडी को, एक इन्वेस्टर को बोलना चाहिए कि लमसम आप इक्विटी में डाल सकते हो। कोई ऐसा मेजरमेंट है पी का, बुक वैल्यू का, इंडियन इकोनॉमी का, हिस्टोरिकल जीडीपी रेशियो का? बिकॉज सारा पैसा तो एसआईपी एसटीपी से आ नहीं सकता। भले आज आपका 20 का मल्टीपल है, कल 25 का था, और कल 10 का होने वाला है। तो ऐसा कोई बेंचमार्क आप बता सकते हैं हमारे ऑडियंस को आज कि भाई ये बेंचमार्क अगर आपका है तो आप लमसम पैसा भी डाल सकते हो? बिकॉज दिस इज अ स्ट्रेट फॉरवर्ड आंसर फॉर एनीबडी दैट कि भाई आप एसआईपी एसटीपी में डाल दो, वो तो हम लोग कर ही रहे हैं। लमसम का पैसा कब डालना चाहिए?
Generally, Brijesh, I mean, one formula which has worked at all points in time is in case a trailing 12-month return has been bad, I mean, invariably there's a mean reversion and future catches up for that past 1 2 year of weak performance. So that is a, I mean, tried and
This is good.
tested formula, but we are not sitting at this juncture at like that because last 1 year, even though markets have been flat, but I mean, markets has done reasonably well over the last 2 years. So market is not very cheap on that basis. Like, I mean, if you look at Nifty also, market is what 21 times next year 12-month forward earnings. So slightly at a historical premium from that point of view.
Got it.
So market doesn't look very cheap at this juncture. But having said that, market correct 5%, 10%. I mean, same. I will start. I will say that put money into the market now. So in case one is a long-term investor, probably 5%, 7% doesn't matter from that point of view because you will also enter. I mean, one thing which I think like next 18 months is going to be very important. Not very important, I would say. Like we are 18 months away from central election. And invariably in the last 12 months, 18 month, the government does a lot of initiative to make sure activity is very high on the ground. There could be a rural support in the budget. There could be a lot of road construction or whatever. And we've seen, I've been positively surprised how the government has been spending money on capex. They have complete. I mean, last month also the capex was up 70-80% on a YY basis. So, I mean, next 18 months, there's a fair chance that economy will also look up from that point of view. And generally, what happens 3 4 months before the election, market starts pricing in either the same government coming in and looking at what politically scenario exists in this country. There would be a fair chance that the current government would come to power. Then obviously stability gets rewarded in terms of slightly higher upfront P from that point of view. So I think I would say evenly balanced from that point of view. In case one is a 3 4 5 year old 5 year time horizon investor, then it doesn't make sense to wait for that 5% correction, I would say, Brijesh.
Okay, so this is a good point for the audience. I will summarize कि आदित्य ने एक बहुत स्ट्रेट फॉरवर्ड आंसर दिया कि अगर लास्ट 12 महीने का रिटर्न अच्छा नहीं है, that's a good point of entry from lump sum perspective, which currently is not the case because last 12 महीने का रिटर्न पॉजिटिव है, इंडेक्स ऑल टाइम हाई पे चल रहे हैं, वर्ल्ड मार्केट की स्थिति अच्छी नहीं है. बट इफ यू वांट टू पुट lump sum money, last 12 months trailing return, if it is negative or it is not very good, you can consider lump sum. And I will mention here, we had a discussion with another fund manager a month back, and he said, if you find any category of investment, any market of investment, if the fund is down 30 to 40%, you don't have to look at what country, what fund, and what strategy that is applying. Just buy, because anything which is down 40% in last 1 year is a buy. So I want one more question as a follow-up on this, Aditya, to understand rather than, technology funds are down. And you just mentioned that technology, there are headwinds. And last 1 year, technology funds are down. They're almost 20, 30, 40%. There are certain stocks which are down 30, 40%. As a whole industry, it is down 25%. What is your view? Don't you think that now on a trailing basis, the market is up? So the answer is that don't invest now, maybe, or come through SIP, STP. But from technology fund perspective, should not one consider investing now into lump sum? What's your short answer to this?
Sure, Brijesh. Look, Brijesh, again, it is not as simple as just seeing last 12-month return and deciding whether one wants to put money or not put money. So 12 month is just a benchmark. So if you look at IT index, I mean, the IT index would be down on the last 12 months. But if you look at last 3 year return, the IT index has doubled over the last 3 years.
Yes, yes, yes.
Nifty is up probably around 55%, and IT index is up probably 105%. So there's a massive outperformance one has seen in IT the 2 year prior to last year. So one needs to factor in that one. Secondly, valuation, at the end of the day, valuation is the most important parameter, because we buy businesses looking at PE. So today also, if you look at IT companies, uh, they are trading around 20-30% premium on a PE basis to what they were doing pre-COVID. So they are not very cheap from that perspective. So I would say, I mean, 3 year would be a better indicator rather than seeing only just last 12 month data point. Secondly, is
Yeah. Okay.
again link the last 3 year return along with the current P. That will give you an indicator: are they cheap or are they expensive from that point of view. So I would say, and also again, one needs to slightly, I mean, where do IT companies get their revenue from? The developed market, the US and Europe. So the pain we are seeing in those markets, I mean, so one should see some moderation in the revenue growth in the coming 1-2 quarter from that point of view. So I would say that one could get a better entry point, and the space has done well on a last 3 year basis and not just see last 12-month data.
This is good. I mean, I pick up this another thought of Aditya that last 1 year is an indicator, but last 3 year also should be a good indicator. And from a technology fund perspective, last 1 year was bad, but still point to point 3 year is extremely good. And another point you mentioned is very valid, that look at from where they are getting the revenue and what is the condition of the economy or the entire demand. So I take that point. So Aditya, another interesting question, Satya.
Because just to add for the viewers' benefit, like, I mean, when I look at a stock, one thing, first thing, not first thing, one of the things I look for is what has been the 3 year return of that stock and what has been the 3 year earning growth of that stock. So suppose the 3 year return, annualized return has been 20%, and suppose the 3 year earning growth has been 25%. So, which means the stock is today cheaper than what it was 3 years
Yeah.
back. So, generally, one should look for stocks and sectors where the 3 year return has been slightly lesser than the earning return, which means the sector has seen some
Yeah.
derating. But then again, one needs to apply why there's been a derating. So, in IT companies, I mean, 3 year earning return has been 13-14%, but the price movement has been around 24-25% CAGR. So that is one ballpark I look for to see whether last. I mean, today I'm getting that company cheaper than what it was 3 year back, or is it much more expensive
Very
compared to earning?
insightful. This is very insightful, Aditya. This is a fantastic answer, and I
and
think
and for and today, because we everyone has access to so much of apps, so I think screener, obviously everyone would be using screener.
mm,
That is a perfect uh, thing to look for. It gives at the down 3 year earning growth, 3 year stock price CAGR, so you get some sense of, are we today buying, because a lot of consumer companies, again, look at Titan. I think 3 year stock price return is, stock CAGR is, I think, 26-27%. Earning CAGR is 23-24%, which means there's a not a lot of gap between a earning CAGR and a stock price CAGR. So even though today the stock looks expensive, but the stock
yeah.
has done well on the back of earning, which means one is still fine with it. So these are just broad thumb rule one looks at, Brijesh.
Right. So Satya Murthy is asking very interesting question. In current market, which segment is undervalued in your opinion, Aditya? Large cap, mid cap, and small cap. And I will add a follow-up question on this. In your large and mid cap fund, do you take advantage of this strategy that okay, I 50 and 50 large, mid and small, and the balance 50? So if your answer is that mid cap is a better position, do you increase that exposure in your overall fund? What is your sense?
Sure. So, as I said at the start, I mean, 50-50 is what we decided at the start, because it has been proven over the last 10 years that a 50-50 allocation has given the highest return. So, the benchmark for this scheme, it's NSE LM 250 index. And it's a very powerful index, I would say. The index rebalances as 50% large and 50% mid cap every 6 months. So, I mean, last 10-year, 15-year data has proven. So I use that as my this thing. Future also will hold same from that point of view. So I've decided I will run like a 50-50 fund. There could be some deviation at different points in time. For example, like it was a 50-50 probably couple of months back. But due to some mid cap, small cap stocks, I had to take allocation. Today, the large cap has fallen to 45% from that point of view versus 50%. So, but broadly, as a thumb rule, I would say 45% large cap, 35 to 40% mid cap, and 15 to 20% is small cap. What I want to run this fund, and also I'm like, because I have to forcefully keep 35% large cap and 35% mid cap by rule, so I cannot go beyond that. So I would say I try to run this fund closer to what I said at the start, that maybe a 40-50 large cap and 50% mid cap with 30% mid cap and 20% small cap would be a good enough asset allocation in the longer term point of view. So that is how I run the fund, Vijesh. First question you asked me.
What is more expensive and what is more cheap? Large cap, mid cap, small cap, as on date.
Look, I mean, you cannot today as an investor, you cannot generalize as large cap expensive, mid cap expensive, small cap expensive, because I mean within that there are pockets of expensive stock. Within large cap, there will be pockets of expensive stock. Within mid cap, there will be pockets of expensive stock. So I think it is, one cannot today decide mid cap. So that's the one other thing as an fund manager of a bundle product. The advantage is that, I mean, I don't need to just go on large cap. So suppose one new listing happened, it's a small cap, I find it cheap, I can take 5% because it is cheap. But a large cap fund manager cannot take exposure to that. So from that point of view, I would say one cannot generalize that large, mid, or small, because if you see last 3-4 year data point, 2 years mid cap, small cap did badly. Last 2 year mid cap, small cap did well. So it is kind of evened out from that point of view. And generally in good times, economy doing well, you see mid caps doing much better, because large caps ability to, I mean, they tend to do much better in bad times versus mid cap, I would say. So I think, I mean, one cannot generalize today this is cheap or that is expensive.
So I have one final question, and then we'll take some audience question. My final question is that, what do you think are the headwinds and the tailwinds going forward for the equity markets? क्या अच्छा लगता है, क्या खराब लगता है?
Like I mentioned, Brijesh, earlier, like biggest headwind I see right now is, obviously anyone says, is global markets seem to be in a mess. Global economy, I would say. Europe, I mean, Europe will see impact. China, the data point coming out of China is not very promising. And so far, जो भी rate increase developed market में हुआ है last 3-4 months में, that impact has not boiled down to real consumption data right now. So one will see moderation in consumption for sure over the coming 1 to 3 months, because I mean US is not US. These economies are not geared to handle inflation of 6, 7, 8%. They are like 2%, 3% inflation economy. So when that, I mean, Fed fund rate, terminal rate expectation being 5.5%, it takes a big hole in your pocket. And mortgage may, suppose you have a mortgage running, your EMI increases by 30, 40%. You have to take out that expenditure from somewhere else. आपको कहीं पे काटना ही पड़ेगा. So there is no way that, I mean, those economies will not see pain. So that, and जब वो होता है ना sir, I mean, India might look relatively better, but I mean, India is not immune from a fund flow point of view from those flows. So I think that would be one big headwind one would see as an investor. On the tailwind side, I mentioned that commodity price is one area which either, I mean, where India benefits or loses out massively. So that Russia-Ukraine war has had a big impact on commodity price increase. Obviously, last 6 months, some bit of that element has gone away. Brent has come down below $80, but still, Russia-Ukraine settlement hota hai at any point of time, you will see natural gas price coming down, crude further coming down, and India will be a big beneficiary of that. So I think that remains one big tailwind as and when that happens. The other is, obviously, as I said, if you look go into future next 18 months, central government election coming, so they will do everything to make sure that the economy, I mean, the acceleration happens in the economy. And right now, government balance sheet is much better than they have been in the past. You look at GST collection, corporate tax collection, so they have been very healthy on an overall basis. So I think you will see some impetus to the economy over the next 18 months. So those would be the tailwind, I would say. Even though I would say next 2 3 months, I see more headwind than tailwind. But if in case one takes the next 12 months, probably tailwind could play out much better than headwind would play out.
Lovely. So I'm done with my question, but Aditya, you can also see some of the questions in the chat box if you like to answer something, or I can also pick up a few questions. For example, Nikhil has just asked, large cap or flexi cap, or I should also add large and mid cap, which is the best for the long-term investment? And he's saying 30 years. So what's your call on that?
I mean, Nikhil, if you take 30 years, all of them will do well. It could be a 1%, 2% difference between that. The only thing is that in 30 years, you'll make so much of money, it will not matter whether you make a 13% return in large cap or a 14% return in flexi cap. So I would say that in case an investor has that longer time horizon, it doesn't matter. Being in the market is more important than choosing where to put it, I would say.
Satya is asking, are we decoupled from global economy?
I mean, as much as we want to believe that, Satya, but I mean, points in time we realize that we are not decoupled completely. There's different linkages. I mean, fund flow is obviously one big thing, one big linkage, which has an impact on the equity market. Like, for example, this year, FI outflow has been to the tune of, I think, what, 17, $18, $18 billion. Half fund maybe saw 28, $29 billion outflow. But last 5 months, we've seen 8, $9 billion inflow. So, I mean, even though India doesn't look to be in that bad a position, still we've got outflow from that point of view. So we are not decoupled from a flow point of view, even though we have stood out the best amongst all emerging markets. One is that. Secondly, I mean, export is one, even though we are not an export focused economy, but still export becomes weaker when global economy does badly. So look at October number. I mean, last 2 months, we've seen the momentum on the export wane. October number, what I remember was we saw a contraction of 16, 17% on the export side. So, I mean, we are not decoupled from that point of view. And again, I mean, look, currency plays a big part in how fund flow moves. So whenever global economy does badly, I mean, we've seen US dollar do well from a reserve currency point of view, safe haven point of view. So last 1 year, in spite of I telling you or everyone telling you that US economy seems to be in a much worse position, you've seen the US dollar appreciate by 10, 15, 20% against each other currency. So, I mean, there are a lot of linkages in the shorter term from that point of view. So, I mean, I would say that we are not decoupled from that point of view. The only thing is that in case global economy does badly over the next 3 6 months, commodity price remains weak from for that perspective, Indian economy will do very well. Even though short-term markets might do badly, that could be the best position to make a lump sum investment from that point of view.
Meena Ganesh is asking, any comments on which country is the cheapest or good for investment? Is it India, or on a relative basis, do you think there are some countries like China, Taiwan, America, Asia? Any comments on that?
Look, Meena, frankly, I'm not an expert on global emerging market. Optically, what you see today, India's premium is much higher than other emerging market. But there's a reason for that. I mean, I remember that in 2005-6, when I came into the market, the term BRIC was coined. I mean, and India was part of that. And BRIC, Indonesia also, I mean, was kind of taken in the same bucket. But today, look, where in India is where other economies are there. Brazil, no one talks about Brazil today. Russia, we all know the mess it is from an investment point of view. China, I mean, probably 20, 30 years they've grown at that rate, and economy cannot grow at the same rate for such a long period of time. Indonesia, I mean, seems to be okay. So today, India seems to be in a much better position if you, I mean, look at everything. Because, I mean, look, optically, PE is a very lame exercise, I would say. India might look 20, 30, 40% expensive on our next 1 year, next 2 year earning. But what our 1 year, 2 year fails to recognize is that, I mean, you have to understand 80, 90% of a value of a company comes from a terminal value. And in case the prospect you see in India more from a demographic point of view seems much promising, much better, the workforce participation and all. So, I mean, So it builds in those things. So I mean, and my belief has been that you should put your money what you understand. What you don't understand, you should not put your money. And you should put money into what you see can believe. Because, I mean, suppose you put money into some other market, Vietnam, China, and we all know we are outsiders from that point of view. The first sign of worry in that market will make you nervous. But in case you are putting money into India, I mean, I would feel much more comfortable, safe. We all know what's happening politically, what India is doing. I mean, how what's happening demographic. So, I mean, obviously, international diversification is one big thing one should do. But probably I'm not competent enough to tell you what looks attractive. The only thing, I mean, probably I keep looking for is, I mean, a lot of global tech companies are very strong. I mean, you look at Google, you look at Alphabet, you look at Microsoft, you look at Tesla. These are companies, these are world scale companies, and these companies have come down. So probably that is, even though I cannot invest, but that is one space in case I want to invest. Probably, I mean, I would be in the eye for it in terms of, because those are global companies. An Apple cannot be created, a Microsoft cannot be created, a Google cannot be created, and these companies touch us Indians in as much they touch any other American. So in case I have to ever put my money, I would say that is the only one asset class probably I would look at, because it's very difficult to replicate those businesses.
Final question. If somebody has made good money in the markets in mutual funds, should he sell and start SIP, STP, or should he continue?
Look again,
Aditya is asking this question.
one good money is very relative. For someone, good money is making doubling money. For someone, making good money is uh, making 10x return. So I mean, it's all relative, but it always pays to be a long-term investor. I was listening to a recent interaction with you had with Mr. Munot, Navneet Munot. He was
Yeah.
telling in that show that a 10,000 SIP in the flexi cap fund would have become a 10 crore today. So in case an investor would have cashed out at 1 crore, he would have thought, I would have made a lot of money. Let me cash out. 2 crore I would have made. So I would say that in case one, and you have to understand what are the option as investor one has. I mean, as a country, as individuals, we are over invested into physical asset, be it real estate and gold. Probably that is the reason last 3 4 years, in spite of, I mean, how retail investors have continued pouring money into the Indian market, that goes to show that, I mean, they are under indexed to equity allocation. So I would say that longer term, in case one believes in India, equity, the asset class, and I mean, this asset class, the tax rates are, I mean, 10%, 15% tax rate is so attractive from that point of view. Liquidity is you can sell whenever you want to, unlike a lot of other asset classes. So, look, my 100% money is into equity. I'm a firm believer of that. So, I would say that any long term investor should not, I mean, one can take out 10, 15% depending on one's need and those things, but I mean, longer term, the rewards are much more than what one thinks one could get, I would say, Vijesh.
That is wonderful. Thank you so much, Aditya, for this lovely talk. And there were a lot of takeaways. One of the takeaway I had was, don't only look at the last 12-month return. You have to see last 3-year earnings return and the stock price return, and what is the divergence between the earnings and the stock price, and then only one can take a very good call whether to enter or exit a particular sector or a stock. That was fantastic the way you explained that. I think it was wonderful to interact with you, and all the very best to you, to your fund, and we'll connect very soon. Thank you so much.
So, thank you so much, Vijesh. Thanks everyone for joining at this hour.
Thank you.
Yeah.
Thank you. Take care. Bye.
Bye.